Hello everyone, I am Mukul, and today we would be starting with the first reading of corporate issues, and that is organizational forms. Let's start with the first LOS 20A, types of organizational structures. So there are four types. First one being sole proprietorship. It is owned and operated by a single person. It has unlimited liability, which means that the business owner or the individual is liable to pay the debts owed by the business. Profits taxed as owner's personal income. So if the business makes $100,000 a year, then that $100,000 is clubbed or is treated as owner's personal income, and then the owner pays tax on it. Second type of structure is a general partnership. Well, when you hear the word partnership, it means more than one person. So when two or more people come together and start a business, it is called as a partnership. Again, it has unlimited liability, and it is formed, or a partnership is registered by signing a partnership agreement. It could be either written, verbal, or incidental. Incidental means acts of the partners. Profits are allocated as per the partnership agreement and taxed as personal income. Just like sole proprietorship, the profits earned by the partners from the partnership business are taxed as partners' personal income. Then we have something called as a limited partnership. There are two types of partners in a limited partnership. One being a general partner, which is a GP, and then you have limited partners, which is LP. Now, the general partners are responsible for operating the business, whereas the limited partners are responsible for contributing capital. General partners have unlimited liability, whereas limited partners have limited liability. What do you mean by limited liability? Let's assume that this partnership owes dollar 500 million, but there are three limited partners. Each of them have contributed 100 million. So you cannot ask the limited partners to pay 500 million because their liability is limited to 100 million each. So each limited partner is only liable to his capital contribution, which is 100 million. This was an example. Profits are taxed as personal income of each partner. GP's share of profit is higher than LP's share of profit. This is quite natural because the GP is responsible for operating the business. So naturally, he would want a higher profit than the LP. Some jurisdictions have LLPs. LLP is limited liability partnership. So in that case, you do not have a GP. This is a key point to remember. And in US, LLPs are allowed only for professional services like finance, accounting, taxation, legal. You cannot have an LLP for a service which is not professional service. And then there are restrictions on the number of partners. Now, the most sophisticated or mature form of an organization is a corporation, also known as the company. Now, what are the features of corporations? Limited liability. We have discussed this before. It is a separate legal entity. A company is separate from its owners. The two cannot be clubbed. A company can distribute profits in the form of dividends. A company has greatest access to capital. Owners and managers are separate. So the shareholders are the owners and board of directors are the managers. They are separate individuals. There are two types of corporations. One is a public corporation, and another one is a private corporation. A public corporation's shares are sold to general public and they trade in a organized market, whereas a private company's shares are not traded on an organized market and there are limited number of shareholders. So limited number of shareholders and restrictions on the transfer of shares, and also there is a possibility of double taxation, which means that a corporation can pay taxes and the shareholders might be required to pay taxes on dividends. Hence, there is a possibility of double taxation. So we have covered the first LOS of organizational forms. I hope this is clear. And in the next video, we would be looking at the key features. Thank you. Thank you very much.